The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 15th magnificent Monday edition of today's Trader's Edge show. I'll figure out what day it is. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to call in. Right now is just fine, 877-927-6648. You can call us at 727-445-1044 if that's easier for you. You can send me an email, steve@tfnn.com. Of course, in that heading, in that subject area, big, bold letters. I don't know. Put in Magnificent Monday. Put in Mastering Probability, my newsletter service. Put in that Trader's Edge. Put in TFNN, put in something so that I can yank it out of the junk box if that is where it goes to. Because I want to, if you take the time to write, I want to be able to take the time to respond. Inside the Tigers Den, of course, you can send me a ping at any time. So let's go ahead and get this show started on magnificent and magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 86 points at 20,982. S&P is up 0.4%, or about 11 points, trading at 2401. NDX 100 up 7 points, 5694. The Russell's up nearly 1%, 13 points. The semis are on fire again, up 13 buckaroonies, 1058 is what they're trading at. You've got gold up $3.60. Silver has been the stronger of the two. We're going to take a look at both those metals. That's up 21 cents right now, trading at 1662. Light sweet crude is on a little bit of a tear. It's up $1.31, trading out at 49.15. Bonds are back just slightly. Leading the charge here to the upside, NetEase up 5% or 14 bucks. Patheon NV, that's up 33%, 864. Alnylam Pharmaceuticals, I think I got that right, 13.5%, $7.68. Regeneron Pharmaceuticals, you and I have been paying attention to Regeneron Pharmaceuticals. That little puppy is breaking out. And it's a big breakout there. $7.45 is what it's up right now, $449.50. I don't recall the number that I asked to clear, but we're probably there or very close. Proof Point, that's up 9% or $7. To the downside, not everything is green out here, mean and green. Some things are red. That's Tesla leading the charge here, down $8, 2.5%. Eagle Pharmaceuticals down 7.5% or $7. Tal-Ed Group down $6.50. Ionis Pharmaceuticals off $4.77. Forterra down $4.65. Granger WW down to $4, and Amazon is off $3. So let's begin with, hey, what are the markets doing out here? The stock markets, right? Because we got all kinds of markets that you and I can take a look at. Let's look at it like this. First, let's switch over and take a look at the daily advanced decline data. And we're going to see in the left-hand panel of my screen, that's the New York Stock Exchange. So in this case here, we've got a wide swath of the market. You'll see the reading in the very bottom panel says 16.44. You'll notice that that is a positive figure. If, in fact, this is where the market closes today at the 4 o'clock bell, I do not know where it's going to close, but if, in fact, that advanced decline oscillator is above zero, it is telling you that buyers are the ones in control of this market. The markets will continue to move higher. Inside the NASDAQ composite, its reading is simply 641 as we speak right now. It is just slightly above zero. It is at new all-time highs out here, and above zero says buyers are in control. The Dow needs a little bit more work in order for that to occur out here. The S&P 500 is tested. Looks like it's tested at this stage here. A test and rejection, I suppose. Let's see the high 2403.87, 2404.05 out there. But with the volatility index being down where it's at, 1050, you know what that means to the markets, don't you? Yes, it means gobs of liquidity out there. And with gobs of liquidity, anytime the market tries to move down, even just a tad, it can't. Where are the sellers? I know there's a few of you out there, but there's not enough. And without enough, these markets are going to continue to just simply grind and move higher out there. Now, there are some problems in these markets. We'll go see if we can find some of them. But sometimes those problems are no better than a weather forecaster here in Florida. And you know they're typically going to say it's going to be basically in the 80s with a chance of rain. Are you kidding me? You live here long enough, you know that there's a chance of rain basically every day because of the 2 ponds of water that we have out there. Well, what good is that? Let's go try to figure out what the weather forecast for these markets are and what they're communicating to you and I. For example, I mentioned the advanced decline oscillator readings out here. Let's take a look at the summation of all of that. Don't let anybody tell you, and I mean anybody, don't let anybody tell you that there is no broad participation in this market out here. Because basically, they're smoking something out there. It's probably, something they shouldn't be smoking this time of day. Or let's just skip that. Let's just simply go take a look at the actual advanced decline line. Now, you're going to look at the second panel on my screen out here, and you're going to see a number. You're going to see a huge number out there. That number, by the way, 399,603. Really irrelevant with regard to the size of that number because it's just the summation of all the advanced decline data going back to the beginning of time for my charts out here. Your number will be different. What's most important about 399,600, even though we're not at new all-time highs price-wise, the previous high inside this indicator tool was 398,965. Well, 399,603 is a higher number. Now, I don't know where it's going to close at the end of the day, but for our purposes, at 1:13 in the afternoon, what we know is it is a new all-time high. And if there's one thing that I can tell you with certainty, not like 100% certainty, but like 10,000% certainty, there is no bear market that starts with the advanced decline line at new all-time highs. If anything, it's a delayed tactic that says it's off for a few months out there. The reality is at this stage of the game, yeah, there's going to be a retracement. What percentage is it? Hey, it could, in fact, be a correction of 10%. It could be. We'll take a look and see if that's even a possibility out here. But I think planning the other side of the trade, buying the dip, we talked about this all last week out there. The real focus should be not that this is going to be the mother of all bear markets that is going to begin out here, but instead it's going to be the mother of all buying opportunities as this market continues to just simply careen up to the top. So it's important to take a look at all sets of tools out there and try to identify when that next bottom might occur. But right now, as your weather forecaster, what this tool is saying is don't expect the rain to last for too many days out there. Steve Rhodes with TFNN. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 94. S&P is up 11 points out here. So key levels for us to be paying attention to today, well, really through the week out here, but certainly today, the resistance zone inside of the equity futures contracts, and we're looking at weekly charts as we speak right now, there's really only one of them that is really key to look at. So, Maria, for you specifically, in the Tiger's Den, the area that you want to pay close attention to is 23.97 and a quarter. So you got 23.9, and you're at 23.99, 2,400 as we speak right now. Any close above the 23.97.25 level is communicating to you and I that until price closes below it, that what it wants to do is it wants to move higher. The NQ, there is no resistance in play. Again, weekly charts that we're looking at, weekly profile levels that we're taking a look at. And what this would communicate to you and I is that the next chart to run into resistance, well, it'd either be the Dow at the 21,106, so we know that's where the Dow wants to go to. There's a party up there at the 21,106 level, just as the Russell 2000 is throwing its own party, and that's going to be at 1414. Now, just because price gets up there doesn't mean to go short the back up the truck and just go short the markets out here. Unfortunately, those profile levels where the snipers are sitting inside those two instruments, and in fact inside the ES, we still know it's at 23.97 and a quarter. It's not exactly as if they have really just cleared resistance out here, and it has held thus far. But there's snipers up there, but those profiles, the structure of them is really not bearish, so to speak. So this market can just simply overrun them like a bulldozer. So be careful out there. Now, with regard to problems inside of the market, if we were to, well, Let's go see if there's a problem here. Actually, I know the answer to that. There is no problem here. In fact, this goes back to the folks that are going to tell you there is no broad market participation out there. I suggest getting some new lenses in those glasses out there, because if we take a look at the cues out here, so you can do this at home, for all you home gamers out here, you can take a look at two instruments. You can put them side by side. In this case here, it's one on top of the other. The equal weighted ETF for the QQQ. That means that Apple is the exact same weighting as number 108 inside of the ETF for the QQ, the NDX 100. That means that Apple, that means that Amazon, they have no more weighting than numbers 50 or numbers 90 or what have you out here. Now, if there wasn't broad participation out here, the equal weighted ETF, QQEW, would not be also making new all-time highs. It's priced at 53.18. We're looking at a line chart because we just like to look at closing prices when we're taking a look at these types of diverging patterns that can form, but have they formed? No, I don't think so. They're both at new all-time highs. With them, that doesn't mean that you can't have corrections that occur like this, but they're basically pretty minor when that occurs. Now, inside of, we can do the same thing for the S&P 500. Now, you know how I love to say this one, and this is the RSP, but we're not there yet. We are not at on a closing basis. Yeah, on a closing basis we are. So here's a little bit of divergence out here. The closing basis right now, we're using, again, line charts out here. We're at 240.24. On a closing basis, that's the SPYs at new all-time highs out there. In the RSP, Guggenheim, you know how I like to say that, Guggenheim S&P equal weighted ETF, we're not there. We are not at new all-time highs. Doesn't mean we're not going to get there, but we are not there just yet. So there is a slight divergence here. But who's your daddy? Yeah, it's the Qs. It is not the SPY out here. And what we know about the SPYs is we have a great line of demarcation, a resistance zone being the TAS weekly profile high. We can take that even one step further by taking a look at the ES Mini out here and go take a look at 60, 240 daily and weekly charts out here. And the ones that are most important, you'd really read right to left out here. So you'd say that on a weekly basis, the bar chart is green and mean because it is above resistance. We've already covered that ad nauseum. The daily is above resistance. That's 23.91. That looks pretty good. The 240-minute chart, which had a beautiful profile that was structured for the bulls out here, the buyers, right, because that point of control, I'm referring to right here where the crosshairs are, or screen number, we'll call it dead smack in the middle there, screen number 3. That is above resistance out here. So in the case of the daily, any kind of pullback, don't let your skirt start flying too high out here, because just pulling back to 23.96, and we'll call it 0.75, 3 ticks out there, that would be normal, and that's where price ought to be able to find support, even on a little bit of a pullback. But clear at 24.02, only 2 points away from where we're at, 24.02 and a quarter, and it is off to the races. Be careful. Look, I have no problem with intraday traders taking the short side of a trade out here, but boy, you clear that area, and you've just got to say, why? The markets still want to move higher. Oh, I know you're going to tell me the why is because we don't have any volume. Folks, we haven't had any volume for God knows how long, and really he or she does. But what you and I know is that the actual supply in the market, the actual float in the market is less than it once was. You and I have looked at the chart of the Qs as an example, and we've seen how that float over the years just continues to come down. Why? Because shares are being taken off the market. So now you've got more money, all that liquidity, all that gobs of liquidity chasing fewer shares that are out there. You don't need the same volumes to go ahead and push those prices to the upside. Of course, that's just Stevie's theory out there, but you got to admit, it's a pretty gosh darn good theory out here. If we do take a look at the volume inside the QQQ series ETF, you're going to see you're at 12 million shares right now. That's nothing. That's diddly squat out here. You did 19 million on Friday, and I don't know, you doubled it right now, which would be kind of silly because I don't know that we're going to be able to double the volume out here, double the fun, but it looks like we are going to go ahead and double the fun. Now, you might ask me, hey, what are those blue and green lines on my chart out here? And you're going to say, I'm going to tell you those are the weekly and the daily TAS market profiles. I think they're kind of cute. They're kind of fun out here to have, but I found that with regard to trying to understand what the indices are really doing, what you're better off doing is taking a look at the equity futures contracts, because those are the ones that have got that basic 24-hour, it's not exactly 24-hour, 23 and a quarter hours of price discovery out there. And when you have that kind of discovery, well, then you can identify potential tops and bottoms out here. And if we go take a look at the NQ, this is where there's a little bit of worry. And I mean just a little bit of worry. And that is that price continues to move higher and does it with less relative energy. Now, all of you out there that have watched the 30-minute video that is on your members page that shows you the patterns that are present at every bear market. And I don't mean just every bear market. I mean every bear market out there. You know that they're really not present out here as we speak right now. But on a daily basis inside the NQ, that pattern, which I'll be teaching Wednesday, this coming Wednesday, and each of you, I'd like you to join in that party because this pattern is just so important for you to learn and understand and use it on the time frames that you trade. If there is any pattern that is important, it is this one right here. Price moving higher with less relative energy, that can be resolved for the next couple of days out here. We'll wait for the market to tell us what it wants to do, but right now, it's just saying, I'm headed higher.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let's go take a look at the mining sector, the yen, the currency pair out there, and figure out, what the Sam heck is going on out here. So let's take a look at both, the good news and the bad news. And I just got to search for the chart. It'd be easy if I just had this at a time. I've got a couple of different worksheets and so many charts, so it's unfortunately it's not there. Where the heck did I put it? All right, let me just try this other tab. What I'm looking for is a chart on gold. Gold and silver, but I think it was gold that hit resistance and is backed off. So I wanted to really take a look at that. Did it hit it? Well, there's the daily. That's a 120-minute chart. Poof, man, what did I do? Well, I'm just going to have to go ahead and I'll just do it here. Let me go ahead and put the contract up here. So sorry about that. I thought that I already had it. I've got it as a doble GI chart out here, but I just want to go ahead and see. It's a little bit easier for you to just take a look at the June contract as we speak right now, just to see what it's done. And really another tool. Let me just clean this up, just a tab. Another tool that I'll be sharing with you tomorrow. That's just so important. It's essential. It's why it's called the 5 essential tools for timing the market out here. And, it just depends on the time frame that you trade. The cool thing is you learn how to use this tool on one time frame. It works on all time frames. And what it does is Tom's got to just simply go ahead and get a trademark on that talk, walk, and squawk, because it doesn't get better than that with regard to trying to describe what the market is doing. If we take a look at the talk, walk, and squawk, it is Stevie's red line, right? So you take a look at the red line. That's referred to as the oscillator unchanged line out there, which in a glance, in a moment, lets me know when that price oscillator has gotten basically right to the flat line, where it would just simply be horizontal, or whether it's rising or whether it's falling. And it is just so important for the vehicles that you trade. Interestingly enough, that number right now is 1237.80. You'll see the red line out there, and price got up to it, and it found it as resistance. Now, that's a problem. Why is it a problem? Because if you look at the price oscillator in the bottom portion of my screen out here, what that says to us is this was nothing more than a counter trend rally and found resistance where it did. It has continued to. We continue to have a falling price oscillator, bottom panel below zero. It's as bad as it gets out here. Now it could overtake that level, right? This is about the bulls and the bears. Wouldn't you like to know exactly where the bulls and the bears are hanging out so that you can see the fight unfold? It's fine to put your money down on either side of that, but then when you get a certain result, know what that actually means versus just totally stand there and then I wish I would have, could have, should have kind of a thing out there. You can always get back in on a trade. But here's what we know right now. Resistance inside of Goldilocks has been pretty strong. 1237.80. Now, I don't know what the exact high is out here, and that number on Stevie's red line changes throughout the day as there's more price activity. But we'll put the daily chart up here, and let's go see what the actual number was. Not that it matters. It was, I don't know. What was it? It was 1237.40. Okay, but I just want you to see now the other thing. So now when we put this chart up on my screen, now I'm going to switch over to this. Hold on. I want to switch to this. I want to just make sure that there's that the data is just dead balls accurate, if you know what I mean out there. And so here we're going to go with our 4-panel screen, right-hand side being the weekly chart with our TAS profiles, the one to the left of that, the daily, and then 240 and 60 out here. And you will see that at the exact price point of 1237.80, high today, 1237.40, it's the bottom of its weekly profile. So that is strike number 2 that does not bode well for the bulls with regard to Goldilocks out here. You have two levels of resistance that have, in essence, been tested and have been rejected out here. Now, the daily chart is saying, I don't know, hey, maybe not so fast. But the truth of the matter is that right now you've got gold trading really right near its center of the box, which is not the center of the box. It's closer to the bottom of the box, but the price point is $12.2760. This is where both buyers and sellers are most comfortable with price out here. If price gets below $12.2760, don't think about trying to step in front of it and buy gold, not until it gets down to $12.1880, at least the bottom of the box. At least on the daily basis, you've got a bullish-looking structure. And if you see it close below $12.1880, it just is giving you the message that it's off to the races lower. Now, if it's off to the races lower out here, that probably says that the yen is also making a move. So let's go confirm that. Let's go take a look at the yen. Let's go look at the currency pair. We can look at it either as the futures contract, which would be up to the moment data, or we can take a look at it with regard to the currency pair that's got a 15-minute delay. Let's go with the 15-minute delay out here, all right? And when we take a look at the 15-minute delay, what you want to be seeing out here is, in order for gold to be moving higher, you really want to be seeing this currency pair moving lower. And at this stage here, what you'd be watching for, again, I've got a bit of a delay. The price point's going to be 113.13. That's where you really need to see gold get below. And I'm looking at the 240-minute chart out here. Let me just kind of refresh that screen. I think it's that. Does it function too? No, that was the wrong one. Let me see here. There we go. I just want to make sure I give you the right number. Yeah, it's 113.13 would be the number that I would be watching out here. In order to say, hey, guess what? The move in gold, it was a more of a fake out. So it looks like and the 240-minute chart, there's a new profile that formed. It's really the center of the box is right in the middle, so the structure is kind of even Steven out there. It's not really providing us with a whole heck of a lot of information out here. So I wish I could give you more, but I can't. I guess I just go back now to the daily chart, because on the daily chart here for the yen, what we're going to see is, for all intents and purposes, this currency pair ought to be moving lower. And the reason that I say ought to is because you had a nice little bearish reversal signal at the 0.618 retracement back on the trading day of May 11th. I think that was Thursday. Friday, you had some follow-through. Last night and today, we're not seeing any follow-through to the downside. So if price clears, here's how you could trade it. But this is why I assume this is why the mining equities are running into some trouble out here. But if this currency pair, overnight, what have you, whenever it might happen, if it gets above 114.37 out here, then gold and silver are going to retreat, and just don't want you to get in the way of it, because the correlation between these vehicles is just simply so solid that only until it stops working will we really pay attention. But right now, it's working, and it really looked like earlier in the day that gold was going to go ahead and take off. Silver was just saying, hey, come on, buddy. Come on, let's go do it. But, boy, hit that oscillator unchanged line, which, you can come see. I'll teach you how to form it so you can see it on your you can calculate it. You can have it on your charts and so forth. So just join me on Wednesday. It's easy to join. Just come over to the homepage of TFNN.com. Go ahead and click on that link. You can sign up for the newsletter service. That's how you get in. If you've never test drove the newsletter service, you can do that for free. And if you have, so you're going to pay for a great set of tools. It'll save you more money just simply knowing how to use that set of tools. That's the oscillator and change line. That's the price relative strength divergence. Hey, how about how the market talks, walks, and squawks to you and I? Japanese candlesticks. You got to know those. And then you've got being able to master the D point. Yeah, all this in 1 hour. Boy, is there going to be a lot of education going on. Steve Rhodes from TF.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD. Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So Jim would like to go take a look at the energy sector. So, Jim, let's go do that, the XLE specifically. And in order for us to do that, we'll look at it. We'll go take a look. Lightspeed Crew, we'll take a look at ExxonMobil, Chevron, maybe Schlumberger, something like that, in order to get a feel for it. So as we take a look at the XLE, let's go ahead and start here. And the question, Jim, was he was concerned that price has pulled back almost since the open out here. You've got the XLE is actually up as we speak right now, so it did gap up, so that's a positive. It did take out a prior swing point, so to speak. In fact, let's do this. Let's turn the profiles off first. So let's go see what kind of information we can glean from this out here as we take a look at the XLE. So we're going to notice a couple of different things. First, what we're going to notice is a gap to the downside. That gap to the downside that we're taking a look at occurred on April 27th. There were 20 million shares. Oh, this is Apogee. Don't worry about that. Let me just change that line out here, because that was for something else. Let's make it a I don't know, a yellow horizontal line. Let's go back to it. So here's the gap. Again, that price point is 68.42 that we're looking at. And you can see how 68.42 acted as resistance. So you had a gap down. The volume, by the way, I think I was going to get to that, was 20 million shares. The first time you get up and tested it was with 10 million shares on May 9th, 18 million shares on May 9th. 12 million shares on May 11th. And today you're up and over that area with 7.6 million. You're trading basically right now on that, 68.43 at 68.42. If you see a close below that, doesn't mean that it doesn't want to move higher out there, Jim, but it just tells you how important and how significant that area is as far as resistance. If you close above 68.42, then what we like to say is old resistance becomes new support. So that's going to be a key to watch. You are up above the most recent swing point. It sort of doesn't matter, but it does, which had 11.9 million shares on May 11th with 7.6. So it seems like you're going to have the volume to exceed that. You could almost look at that as a small A to B equals CD setup out here. But instead, I'd rather pay attention right now today on that 68.42 number. Now, if we go turn on our profile levels out here and we look at the weekly area, if you close above 68.42, this offers the promise and or potential of getting up to 70.36, the top of the weekly box out there. You and I have identified, and we know how important these little silent, they're not so silent when we put them on our screens out here, tools they are to help us identify where the warriors are at, where the bulls and where the bears are. Now, in this case here in the XLE, this structure of this brand new box that formed this week is actually a bullish formation structure. So close above 60.80.42 gives you another bullish message, at least bullish enough to take price to 70.36. So watch again, 68.42. If we go put the daily profiles out here on our screen, we're going to see that today's move is actually a close above, or potential close above the daily profile level of 68.38. Still, go ahead and make 68.42 your number to be watching. You close above that, then the message is here, profile-wise, going ahead and changing the old resistance, now becoming new support and moving to 70.36. To me, that's what it seems like the XLE is communicating to both you and I. Now, I mentioned that we should go take a look at light sweet crude. So we're going to plop over to this chart right here. We're going to go take a look at light sweet crude. We're going to do it on 4 different time frames. It's trading up $1.25 at 49.09 right now. And what this is telling us is, well, here's what you really need to see in order for the XLE to get some juice, assuming that the correlation that exists between the two of them is an important correlation. See, light sweet crude, I've been calling for light sweet crude to get up to 49.76. Okay, I was wrong. I missed it by a dime. It got up to 49.66. Now, the day's not over, but that's close enough for me, for our style of work. And you can see that that profile, you might say, what profile you're taking a look at? It's this daily one. You can see how the structure of this is a bearish structure, right? You've got that point of control closer to the top of the box. So 49.76 is going to be some tough, depending on how you use the word tough, sledging, trying to get through there. Getting through that level would be a real bullish message out here. So in the XLE, in the light sweet crude, you're in that trade out here. I don't see any reason to close that trade out. I see every reason to make sure that you're using an appropriate stop, depending on when you got it. Well, you just take a look at the average true range, one of those tools that's available to all my subscribers out there that in an instant will tell you for the vehicle that you're trading what to consider using as the basis for a stop, because we use that basis multiplied by some type of Fibonacci number 1.2, 7 to 1.618 to go ahead and readjust our stops out there. So if you see light sweet crude, what you want to see to be long on that trade, to continue to be long on that trade inside the light sweet crude complex, is a move above 49.76. Because if you get that, where price is headed to is 52.46 out here. So you can see on the daily, price got up to resistance zone. It was a profile high out here on the 60-minute chart. So we know that that's a fairly decent 49.66 to 49.76, a pretty decent level of resistance out there. Clear that area, and you're headed to 52.46, and you will enjoy the trade, I'm sure, inside of XLE. So just to for the blanks and giggles, you go ahead and you fill it in. XOM is the ticker symbol. Let's go take a look at it. Its message is probably going to be similar to the XLE, but on the other hand, it could be different. In fact, it is really slightly different. So this bodes well, I think, for your trade. Because on the trading session here of March the 30th, I don't know what the frenzy was all about, but it was a nice little frenzy inside of XOM where it moved higher with volume. Volume of like 44 million shares. Now, pretty good chance when you're only doing 5.5 million at 148, you're not going to take that volume out. But this says that ExxonMobil ought to at least get up and test 83, 87 out there. So that bodes well for you. I don't see any reason as we take a look at ExxonMobil to suggest otherwise. Let's go take a look at Chevron for you, CVX, as the ticker symbol out here. It just needs to clear the resistance zone of 107.26. You're trading at 107.21, so clearing that would bode well for your trade inside XLE. And then Chevron ought to get up into the 109 and a quarter. So, Jim, I hope that assists you with your trade inside the energy sector. Best of luck to you there. All right, so let's go take a look. Hey, how about that? Apple, Snapple is trading down 70 cents or about 0.5%. Let's go take a look at it and see what kind of message we got here. We got no message of any concern inside today's candle inside of Apple. So it's just telling you it's a little bit of a pause. Where Apple is headed to is 162.39, minimum of 162.39. It's trading 155. Remember when Apple, in order to join the Dow, it needed to do one of those 7-to-1 splits out there? You remember that? It was doing splits like a ballerina was doing splits out there, or a gymnast, Nadia Comaneci or something like that. Nadia Comaneci? I think I screwed that up. Sorry about that, Nadia. Hey, I think just remembering her name, and she is the true 10. Is she not? It's not Bo Derek. It's Nadia who was really the true 10 out there. In any event, I was getting back to the 7-to-1 split. Remember, so Apple was trading around $700, brought it down to like 100. Where do you think Apple's going to be trading at? A couple of years. I think at 155, 162.39. Are you kidding me? It's headed back to 700 buckaroonies, folks. That's going to bode well for the. That's going to bode real well. He wrote the TFNN, right?
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour following the Tom O'Brien Show. Mondays and Fridays. Catch live trading on the Nadex platform with host Tom and Tommy O'Brien along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So, question that just came in here and is with regard to shorting the 30-year Treasury out here, the June contract. And what is it that I see? This is what I see with regard to the 30-year Treasury. It's about to have one of Stevie's favorite patterns out here that'll give us the signal. That's where these three lines are coming together. These three little lines are converging, one of those being Stevie's red line out there. And when those red lines come together, if price is pulling back into it, in this case here it is, by the fact that we've had a counter trend rally the last couple of days, so price has been pulling into Stevie's red line, this is where it gives us really good meaning. And you can see that the price oscillator is above zero. So the key here is if price overtakes Stevie's red line, the oscillator on change line, something I'm going to teach you how to use on Wednesday evening out there. If price overtakes that level, right now, what's the price at? And it doesn't really matter today because we're just not there just yet. But the question, what do I see? And so let me get my crosshairs out here. That'd make it a little bit easier too. Well, why didn't it do that? Crosshair, there we go. So the price point, Stevie's red line, 151.85 out here, or 88, I should say. If price gets up to it, we see that convergence, and price gets above Stevie's red line, that is a very bullish move out there. Because what should happen is, if, from the bearish side, what you want to see is you want to see price get up there, or these lines come together and then deflect, move lower, take that price oscillator, that bottom panel down below zero, and then you've got your trade setup. See, the last move out here when we saw that last counter trend move, where we saw these lines come together, this little convergence, we saw price come back and test the red line and reject it. That was the indication that it wanted to move higher, which it did. Up into a point. It broke the consolidation. We're back underneath it. But this is what I see. I am, and I have been for the last several months on a daily basis, providing the Timer's Digest with my calls and bonds and gold and in the S&P 500. And the results are just fabulous. So, by the way, those market postures are inside the daily newsletter service, so that people take an intermediate term look or a long-term look, and the newsletter itself covers daily what's going to happen, what we anticipate out here. So as I'm doing all this stuff, might as well get the recognition for it, if you know what I mean out there. At least that's what I'm hoping for. And so I have my position inside of bonds right now has switched to neutral. It was short. It was bearish. When I saw the yen making its move, I went ahead and switched to neutral out here, wanting to see this specific test here, which may take place today, tomorrow, the next day. When it does take place, then I'll know what the next move is out here inside of the 30-year, or at least what the signals are that the chart is telling us about. So that's in the 30-year. So, folks, I want you to know one thing, and that's this. I'm not a cheerleader for the Bulls or a cheerleader for the Bears. I promise you as much enthusiasm for either side of the trade when the market is giving us those signals out there. And I like to have as much conviction as I can inside this voice. That does not mean that I'm not going to be wrong out here. But I want to make sure that you know that I've got the conviction and the confidence in these charts and these signals and these patterns out there, because I want you to have that exact type of conviction. And I can show you how to do it. I want to. And the thing is, you don't have to pay all the time and money, that goes along with it, because you're short on time, I'm sure of it. And instead, I'm going to go ahead and condense those thousands of hours into the best of what you need to know. So if you would like to learn some of these tools, come on over to the homepage of TFNN.com. Sign up for my newsletter service. Do it for just a month. Hey, if you can do it for free, you got to get to that webinar. It could be, it's going to be posted on your members page if you can't be there Wednesday night. Anyways, have a great day. Stay tuned. Your favorite polar bear in mind, David White's up next. Have a great day. We'll see you on Terrific Tuesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.